Barclays CEO Bob Diamond about the nation's financial system. And later this morning, New Jersey Governor Phil Murphy ready to outline guidelines for reopening schools in the fall. It's a big precursor because a lot of parents can't go back to work if the schools don't go back. We will see what he is looking for on that front and how things are going. We'll speak with him ahead of that announcement. You can check out the futures at this hour. Dow futures down by about 76 off the lows. S&P futures are down by 1, and the Nasdaq is indicated up by about 10.5 points. Squawk Box will be right back.
In Peytonville, there's lots of ways to save on auto insurance.
Really?
Yep. Very proud of that. With Smart Ride from Nationwide, they can get discounts for safe driving.
Does she get one?
Mrs. Carmichael, safest driver in Peytonville. Takes a lot of work and effort to be the safest driver in Peytonville.
What about this guy?
With Nationwide Smart Miles, the less he drives, the less he pays. The list of inspiring stories goes on and on.
I bet. I've never seen anyone do more with their retirement than you.
I concur.
Turning points on reopening the nation for recreation.
Travel as we knew it, is it ever going to come back?
Education. Developments toward a vaccine. Special report tonight. Watch or listen live on the CNBC app.
First rule of special ops. Be aware of your surroundings. Complete visual clarity, because survival, safety, and success depend on it. These special optics give you the power to see all your surroundings. They're HD vision, special ops. Most sunglasses just make things darker. And in a tactical situation, that can be deadly.
Inspired by the needs of our men and women in uniform, Special Ops offer UV protection, are scratch resistant, and can survive the harshest conditions.
Because no matter where you are or what you do, seeing clearly can save your life.
You can get HD Vision Special Ops for $19.99. You'll also get our HD Vision Night Ops glasses absolutely free. Night Ops enhance color, clarity, and cut the glare of oncoming headlights. Both pair for just $19.99.
Don't wait. Get your Special Ops today.
To order, call 1-800-416-0870. That's 1-800-416-0870, or you can go online at hdspecialops.com. Call or click today.
The bank stress test results are in, and the Fed has ordered banks to limit dividends and halt buybacks, warning that a prolonged downturn driven by the pandemic could result in deep losses. Wilfred Frost, I'm excited about this because he's on the Squawk Newsline, which means we're going to use this picture that is so amazing, Wilf. I mean, I don't know if you've seen it. You may not know what I'm talking about, but I think it's my favorite of all the phone pictures that we use for phoners. It's unbelievable.
Well, you're kind, Joe. I have seen it because, in fact, I'm in it. But I'm just grateful to Mary Duffy and team for their helpful airbrushing.
No, it's not. It's not. I know you, and it's not even airbrush. But oh my God. Anyway, I'll try to.
Well, I'm sorry I'm not with you in person. We just had a podcast to crack tech-wise. But anyway, let's get to the stress test. But overall, Fed Vice Chair for Supervision Randy Quarles said, quote, "The banking system remains well capitalized under even the harshest of downside scenarios." Now, despite that, there were some headline-grabbing aspects of yesterday's release that have put pressure on bank share prices overnight. Most important was the fact that given the uncertainty created by the virus, banks will have to resubmit their plans and be retested again this year, likely around September. Markets, of course, want certainty. We only have it as it relates to their capital plans now for a few months. As for the current capital levels, banks will only announce their individual Fed results next week. But based on backed-out analysts for estimates, it looks like Goldman Sachs is just below their required stress capital buffer, or SCB. But they will not need to raise new capital. It's not binding until the 1st of October, and there's plenty they can do before then to rectify the situation. JP Morgan's required SCB also toughened a little bit more than expected, but they're fine where they are. On the flip side, the biggest positive surprise was Morgan Stanley. This because the required SCB fell rather than their extra level rising, likely because of their E-Trade acquisition. Citi's required SCB also improved a bit relative to expectations. The other standout aspect was a limit on dividends, which now cannot be higher than trailing 4 quarters of earnings. It can't be above 100% payout ratio. In the short term, for the vast majority of banks, there's plenty of headroom, but as each quarter of low earnings replaces one of good earnings from last year, the numbers could get tougher, especially for Wells Fargo. Their dividend, 51 cents last year, trailing 12-month earnings, 52 cents. It's therefore widely expected they'll have to cut their dividend. Share prices, though, overnight down a couple of percent. So in the scheme of 2020, not enormous pullback in those share prices, guys.
All right, Wilfred, thanks. We're going to get to someone who I hope has been poring over these numbers. I'm sure he has. Bob Diamond, CEO and founder of Atlas Merchant Capital. And we've talked about this a few times, Bob, on the air, and that is that because of 2008 and what happened, these banks are better capitalized than in previous times when the economy has come under a lot of pressure. So we've taken that as a given, and I'm hoping that the stress tests prove to you that that narrative is correct, that the industry is in pretty good shape to withstand everything that's being thrown at it this time around.
Yeah, Joe, I think from the Fed's point of view, it's all about capital. I think the tweaking they did with the Volcker rules as well was about derivative positions, not proprietary positions, and that freed up, I think, about $40 billion in capital for the big banks. So I thought this was the kind of action you would expect from the Fed during a crisis, and this is in many ways a crisis. And I think it was prudent, it was thoughtful. And I think the results show that we have a well-capitalized banking system at this time, which is, as you said when you started, very important.
Okay. And the way that they have decided what's prudent for banks, no buybacks, but you can keep paying the dividend, that didn't go far enough we know that the Lyle Brainerd, the last Obama holdover, I think, at the Fed, thinks that they shouldn't be paying dividends either. Is that grossly political, or is that prudent? You don't want to get to the point where the people that have, once again, the asset holders of the banks, they get their dividends. If the banks get into trouble, then once again the public ends up bailing them out, and normal people didn't get any of those dividends, and here they are bailing them out again. Is that likely to happen?
I think all of these actions mean that our banks and the government are working much more closely together. I think, if I'm not mistaken, Joe, I think most of the big banks had already agreed not to do buybacks. And I suspect they'll be fine with a period of more caps and more focus on the amount of dividends. Because as I said at the beginning, I think for Chairman Powell, this is about capital. This is about keeping as much capital in the system as possible during this period of a crisis. And so I think it's an appropriate discussion. I don't think there's any perfect answer, but I think the way that the Fed has gone about this is both prudent and thoughtful, and I think they've come up with a pretty good solution for now.
Well, Democrats,
I wouldn't be shocked if down the road,
Democrats don't
maybe
think
they did
so,
more
though,
on limiting dividends.
Democrat. I'm sure Elizabeth Warren. I'm sure Elizabeth Warren doesn't think that that they should keep paying dividends just on the chance that this lasts longer. Sherrod Brown, I read from Ohio, doesn't think. Why not just take a step back on all shareholder distributions and not just the buybacks?
Listen, in all of these actions, they're already limiting them, Joe. So they're eliminating buybacks, and they're limiting the amount of dividends. So they're already in that position. And what you're saying is the Democrats would like them to go further? Of course they would. And I think that comes back to the same core issue, which is it would leave more capital in the system.
Yeah. Andrew, you want to?
Bob.
Yeah, okay.
Also wanted to ask you just about consolidation, sort of given where we are, given the conversations we've probably had now over the last 12 years since 2008, and just how much consolidation there is and whether you think that poses any risk at this point.
So I don't think there's risk at this point, Andrew, but I think the facts are kind of clear. And, you know, as I look at Andrew Ross Sorkin, the author of Too Big to Fail, and I think about 2008 and 2009, and the whole focus from elected officials, not just regulators, was we will never have too big to fail again. And I think today, if you look at the SIFI banks in the U.S., the 8 institutions, they're all bigger. They all have more concentrated risk. I think the amount of deposits of the top 4 banks in the U.S. are now double. They own 45% of DTC. I think the risk is more correlated with the national government. And, you know, those are just facts. So if the goal was to eliminate too big to fail, I don't think that that's been accomplished. But if the goal was to make the banks extremely well capitalized and more aligned and interconnected with public policy, that probably has been accomplished.
So, Bob, we've talked a lot about what the Fed has done, the extraordinary things that the Fed has thought necessary to handle the situation. Do you have any issues or just kudos for the Fed's handling of the pandemic and the shutdown?
So this far, I think the grade for the Fed and the Treasury has to have an A in there somewhere, whether it's an A or an A minus. I think their actions have been phenomenal. I think they've been fast, Joe, in terms of getting right off the mark. I think they've been very, very broad. Of course, all of us are going to want to see kind of a full 4 years of university, if I can use that example. And you know, over the years, we also have to make judgments based on how this plays out down the road. But right now, I think we're already in economic recovery. I think it will be jagged. I think it will take a while for all the reasons that we've talked about. But you have to give credit to the Fed and the Treasury for the actions that have been taken. They've been phenomenal.
Hey, Bob, just really quickly, we had Mike Mayo on yesterday, and I asked him which banks he thought could be in the worst potential place if we do see a lot of loans go bad, if that's just some of the areas that have been hit more hard, if they have bigger exposure to it. He said the banks he would be concerned about would actually be the smaller banks, because maybe they would be in a position to have a lot of small business loans that the businesses wouldn't be able to open up again. And it made me think, you know, we get concerned about banks being too big for sure, but maybe being big has some definite advantages, particularly in a pandemic like this.
Well, I think right now the size of the banks and the the capital levels that we talked about mean that the banking system, particularly around the larger banks, is very safe. I'm not as close to the smaller banks, but I think the trends that we're seeing are trends toward consolidation of the smaller banks. So I think in directionally, I would agree with Mike.
All right, Bob, thanks. We're gonna end it here. I mean, that was you just brought up too big to fail on your own. You didn't. I mean, I know Andrew talks to you at times. He didn't ask you to plug that, right?
Well, you know, you can't look at Andrew Ross Sorkin, the author of Too Big to Fail, and not bring that up.
Now you're just piling on here. It's just so he didn't ask you. That was just you being a good guy to doing that, huh? You watching You're binging Billions this weekend too. I mean, you want to just get that in while you're at it, Bob?
Never seen an episode of Billions, so you don't have me there, Joe.
Okay, bad. I took it too far. I'm sorry, Andrew. Anyway, let's get out of here now. Let's get to break. Thanks, Bob. We'll see.
Thanks, Bob. When we come back, a new report from McKinsey on the growing achievement gap in America and the impact on the economy. As we head to a break, a look at winners and losers in the Dow this morning.
Interactive Brokers charges 1.55% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 6.82% at Fidelity or Schwab to as high as 7.45 to 7.75% at E-Trade or Ameritrade. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
USAA was made for right now. Right now is a time for action. So for a second time, we're giving members a credit on their auto insurance because it's the right thing to do. We're also giving payment relief options to eligible members so they can take care of things like groceries before they worry about their insurance or credit card bills. Right now is a time to take care of what matters most, like we've done together so many times before. Discover all the ways we're helping members at usaa.com/coronavirus.
Coming up, how do we make sure we're ready to meet all the regulatory requirements? We need to ask Markham.
Ever wonder where the people with all the answers get all the answers? Ask Markham, accountants and advisors.
Can I find an investment firm with a truly long-term view that's been through multiple market cycles for over 85 years? With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
Options Action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options Action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Welcome back to Squawk Box Futures. Right now, we actually, I think, turned positive just briefly about a half hour ago, maybe 20 minutes ago. We're back down on the Dow, but the NASDAQ, find some buying, it seems like, most mornings when you don't see it evident. I guess that's not surprising with all the technology and the stay-at-home sort of plays that we've talked about so much. S&P is basically unchanged. Let's take a quick look at oil this hour, which has been problematic if you're looking for a big V-shaped recovery. In the last couple sessions, it was above 40, but it's almost back to 39, which probably is not a problem. It's probably pretty good compared to when we were down in the teens. We'll be right back.
Give your customers easier ways to pay with the platform built for effortless payments. Adyen. Business, not boundaries.
What can employers do to best position themselves?
With every company in every industry, digital transformation has to be on the CEO's agenda.
And this is a game changer. Not having an intentionality right now will be a critical mistake.
With daily insights on the new now, this is Business Interrupted with EY.
I'm constantly looking for ways to work more efficiently. Fiverr's digital marketplace allows me to manage the expected and the unexpected by sourcing designers, writers, developers, animators, and more. Connect with the freelancer in minutes. Fiverr. It starts here.
Give customers access to precisely what they want when they need it the most. With Adyen, the payments platform that delivers convenience for all. Adyen. Business, not boundaries.
First rule of special ops. Be aware of your surroundings. Complete visual clarity, because survival, safety, and success depend on it. These special optics give you the power to see all your surroundings. They're HD vision, special ops. Most sunglasses just make things darker, and in a tactical situation, that can be deadly.
Inspired by the needs of our men and women in uniform, Special Ops offer UV protection, are scratch resistant, and can survive the harshest conditions.
Because no matter where you are or what you do, seeing clearly can save your life.
You can get HD Vision Special Ops for $19.99. You'll also get our HD Vision Night Ops glasses absolutely free. Night Ops enhance color, clarity, and cut the glare of oncoming headlights. Both pair for just $19.99.
Don't wait. Get your Special Ops today.
To order, call 1-800-416-0870. That's 1-800-416-0870, or you can go online at hdspecialops.com. Call or click today.
Welcome back, everybody. Shutdowns caused by the coronavirus could exacerbate existing achievement gaps in education, according to a recent report by McKinsey. It argues that the loss of learning is not likely to be a temporary shock, but rather something that could translate into long-term harm for individuals and impact future salaries and economic growth for the entire country. Joining us right now is the co-author of the report, McKinsey partner Jimmy Sarakatsianis. Jimmy, thank you for being here today.
Morning. Thank you for having me.
I know that you are a former middle school teacher and that you've been working to try and help people understand, companies and schools understand better how to do online education. But I know you've also taken a step back just to see what coronavirus has meant, and every parent worries about this. What does it mean for kids to be out of school in general?
Yeah, I mean, look, we were all caught off guard in the spring, and when schools closed, there was a lot of work, a lot of teachers and other educators scrambling to figure out how to best keep educating children. The reality, though, is it wasn't as good as being in school, and it's likely that if that continues into the fall, which is where we're headed, that we're going to still continue to have disruptions. Students are going to have less access to learning, particularly Black and Hispanic students and low-income students, that they're going to have, tougher times learning remotely than they are in person, and this is going to lead to not just learning loss overall, but exacerbations of achievement gaps because of that differential in access. Our estimates are that if this disruption in schooling continues even until January, we're looking at overall Black students potentially losing 10 months of learning, Hispanic students losing 9, white students losing 6.
What can we do about that as a society?
Yeah, I mean, right now, look, school systems they're scrambling to figure things out, figuring out, number one, how to get all students access to devices. We have evidence that in the spring, 90% of white students were able to log in to learning apps, but only 70% of Hispanic students and 60% of Black students. So number one is closing that access gap. Number two, it's likely that not all students are going to fit in schools based on many of the physical distancing requirements, according to the CDC, and that states are putting out. So we need to figure out how to prioritize space and capacity for those students who need it most. And then third, we have to figure out ways to surge, finding extra tutors to spend one-on-one time with those students who need it most, finding time over the summer, getting more students in summer school, making sure summer camps or any of those activities have more learning in them. And then in the school year, experimenting with extended days, doing mini accelerators during vacation time, and really above all, making sure that our teachers are ready to teach in different ways and to target those students that are going to have increased learning gaps than they've had before.
Jimmy, this week we spoke with Senator Lamar Alexander on the program, and he said that he would like to carve out additional funding to make sure that the schools are up to snuff and ready to go and ready in this coronavirus age. Is extra funding from the federal government enough, or is there more that the states need to be doing and more that maybe companies can do to help out too?
Yeah, look, this challenge is coming from all sides, and not only do some of those things that I just described cost money, but also if budgets are down, that's also known in past recessions, that's widened and exacerbated achievement gaps as well. We think there is a case for investment. Those learning losses that I described before, we think could cost the country up to $100 billion in lost earnings over the lifetime of this current generation of students, which could translate into about a $200 billion hit on GDP, which is about a 1% knock on U.S. GDP. So there's absolutely a case for investment here, and it's likely going to have to come from all sides.
What would be an investment that would help bridge the gap? What amount?
We haven't created an estimate, but there are many groups out there estimating in the hundreds of billions of dollars, but we have not done an estimate ourselves.
In terms of companies, is there a program you could look to, a place where some companies are stepping in? Is this about trying to make sure that the digital access is there, or is it even more broad that companies should be looking for this?
Yeah, I mean, I think it's time for us as a society to get creative, and certainly for companies to participate in that. The digital divide is certainly one of the more concrete, finding ways to make sure that every student has a device, not just a device they can share with their siblings, but a device that they can use throughout the day, and high-speed internet. But also, we need, in many places, we're going to need more space. So to the extent that companies or others can help free up space, that's another way to contribute. And then finally, we need more adults, more humans interacting with students, especially to give those that are further behind one-on-one time. So companies not just donating their resources, but also their people and their time to spend time with students, to spend time in schools, helping them run what is going to be operationally a much more complex school day. So the more our organizations, our companies can pitch in with their people in addition to their money, it'll be a benefit.
Jimmy, thank you very much for your time today. Jimmy Sarah-Katsanis. And by the way, speaking of education, New Jersey Governor Phil Murphy is going to be joining us later this morning to talk about the state's plans to try and reopen schools in the Garden State in the fall. That's at 8:30 this morning. We'll have much more coming up. Andrew?
Such a critical issue for our kids and also for our economy. Coming up when we return, much more on the markets this Friday morning. Take a look at the biggest losers in the S&P so far this week, led, of course, by travel stocks. We'll talk more about that, and we'll do it next. And then later, don't miss our first on CNBC interview with Ford COO Jim Farley. He's going to join us to talk about the company's unveiling of its new F-150 truck. Squawk Box returns right after this.
Land Rover, above and beyond.
In Peytonville, there's lots of ways to save on auto insurance.
Really?
Yep. Very proud of that. With Smart Ride from Nationwide, they can get discounts for safe driving.
Does she get one?
Mrs. Carmichael, safest driver in Peytonville. Takes a lot of work and effort to be the safest driver in Peytonville.
What about this guy?
With Nationwide Smart Miles, the less he drives, the less he pays. The list of inspiring stories goes on and on.
I bet. I've never seen anyone do more with their retirement than you.
I concur.
Can I find an investment firm with a truly long-term view that's been through multiple market cycles for over 85 years? With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
The ADT Yard Sign stands watch over your home and family with tested, trusted 24/7 protection. Now get our lowest rate for fast response monitoring starting at just $28.99 a month, about $1 a day. Call 1-800-ADT-ASAP.
Venturing beyond the neighborhood, reshaping local economies, bringing the workforce back safely. The high stakes for a vaccine. Stay connected, stay informed. Watch and listen live on the CNBC app.
Good morning. Futures volatile this morning. They had a nice rally in the last few hours, then they lost some steam. This is the Dow and the S&P 500 are on pace now for their second negative week in the last 3. A couple of important transportation stories this hour. Major airline unions calling for a second federal aviation bailout worth tens of billions of dollars. And here on the ground, Ford launching an all-new F-150 into the pickup truck wars. The company's chief operating officer, Jim Farley, will join us. And the road to reopening in New Jersey. The state's governor, Phil Murphy, is going to join us to talk about that new travel advisory, asking people from virus hotspots to quarantine when they arrive. The final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC. I'm Joe Kernan along with Becky Quick and Andrew Ross Sorkin. And U.S. equity futures have now moved into, at least the Dow, into the red in triple-digit numbers, 108 points now on the Dow. The NASDAQ continues to be in the green. It's up about 2 points. It has been relative, it's been noteworthy that it's been relatively stronger than the Dow in recent weeks. The S&P now negative as well, down 3 and change, now down 4. Becky.
We will continue our focus on the markets. That's where we start this hour, and specifically how it remains top-heavy in terms of what investors are looking at. CNBC senior markets commentator Mike Santoli joins us now with more. And top-heavy, some people might consider that an insult. What do you mean, Mike?
Top-heavy, meaning the S&P 500, the index is still, to an unusual degree, dominated by the very largest stocks. If you look at the S&P year-to-date against the equal-weighted version of the S&P, these are the same stocks, just the lower one here is equal-weighted. This is market cap-weighted. It's really an answer to the question, Becky, that everyone keeps asking, which is how could the market be so close to its highs or only down less than 5% year-to-date with everything going on? Well, the market, so to speak, is not. Look at the angle of descent in the equal-weighted S&P since early June. June has been a month of choppy pullback consolidation in this market, whereas the regular S&P has more or less gone sideways. That's because of the dominance of the very largest stock. So we actually have had some recognition of the economic difficulties, especially the reopening issues, if you look at the average stock. And to illustrate this more closely, Microsoft against J.P. Morgan. 2 Dow stocks, 2 bellwethers, 2 best-in-class companies. One is up almost 30% this year. One is down almost 30% this year. But the market cap gains in Microsoft are double the market cap losses in J.P. Morgan. For every percent that Microsoft goes up, J.P. Morgan has to go down 5% to offset that. So this is what's going on, stock by stock, sector by sector in the overall S&P 500. It helps explain how this very concentrated market is able to hold together, anchored by a really strong corporate credit market and obviously everything going on with the Fed, as stocks like banks and other cyclical stocks suffer and struggle through this environment, guys.
Hey, Mike, just in terms of what this is reminiscent of, when markets get top-heavy like this, what does that lead to traditionally?
Well, you can look back. The last time you had a real bout of this was the late 90s, not the absolute end of the internet bubble, but as you got into the late 90s, this was the case. But also, if you want to look at the top 5 stocks or the top 10 stocks and whether they dominated the S&P the way ours do right now, you go back to the 70s and 80s, and there were periods like this, and of course, back in the 70s, the Nifty 50 era. So it can basically be a phase and then giving way to a broader market. By the way, that happened kind of after 2016 to some degree. You did have a broadening of the market in a value trade. So there's no particular script it follows. I think the way to think about it is, though, is the large stocks for now are insulating the index against more pain than they would otherwise be feeling right now. The question is, can they really bridge us over to that point where everything else benefits from a recovery?
All right. Thanks, Mike. Good to see you.
Meantime, we are now joined by a very special market guest who warned of the systemic risks of the coronavirus, and he did that back in January. Joining us this morning is Nassim Taleb of Universal Investment Scientific Advisory, and he's the author, of course, of Black Swan. It's great to see you this morning, and great to just check in and understand what's going through your mind and how you're looking at both the economy and the markets right now, Nassim.
Hi, thanks for inviting me.
What is, how are you looking at this, given where we are, given how much stocks have run, and then recently, of course, what looks like a little bit of more spread and potentially even more than that, and how the markets are reacting to it?
I'm not. I don't follow noise in the market. That we're witnessing now is noise. Let's look at the fundamental issues that we're facing. Bonds practically have no upside structurally because you may have some negative interest rates for frictional reason, but you can be. You cannot have really negative interest rates. So fixed income instruments have pretty much run their course. So you're no longer able to hedge using fixed income instruments. They ran their course. Your bonds went to whatever the maximum value they can have. And of course, federal policy, by putting interest rates at zero, they also lost a weapon they have. So an investor no longer has a traditional hedge of having against a stock portfolio of using bonds. So what's left is only one thing, is a tail hedge. Make sure that you don't, the thing we do for a living is make sure you do not blow up, and you keep your stocks for their upside and protect your downside.
But how do you protect your downside in this market then?
I mean, if you don't have a tail hedge, I suggest not being in the market. That's the idea. And if you have a tail hedge, then of course you're going to have the opportunity. We really what we're facing is a huge amount of uncertainty for many reasons. They've been printing money like there's no tomorrow. They're going to print more money. They have no other possible policy other than just print money and distribute it to people. They cannot lower interest rates. As we said, they've lost that monetary policy tool, and the COVID seems to be there. I mean, even if the pandemic, the rate of contagion, if that dies down, you will still have people cautious enough in their behavior that the pandemic will be there and affecting a lot of industries. So, given that, you may expect some kind of inflation. I don't know. We may be now in a deflationary phase. We don't know, but the notion that you may have a mild inflation is a lunacy, because historically there's no such thing as light inflation. Either you have big inflation, or you have a very large deflation. So typically that mild inflation is a transitory state that doesn't seem to exist outside conversations. So you need to, in a very inflationary phase, maybe stocks pick up. So you cannot lose your stocks. You need hedges. Cash burns, very quickly. And in a deflationary stage, also, you may have a problem. So you need to balance all these things out by having the most possibly conservative portfolio today. I'm not just talking about individual institutions. Today, you need to be vastly more careful about what portfolio you have and make sure your downside risk is protected.
Hey, Nassim, can I just, if you're looking at a market where we would be potentially dealing with extreme inflation, it seems like you would have to be in the market, because if you're keeping money in cash, it's going to be worth less and less every moment. And if you're looking at a situation where we have zero rate increases, then you can't keep money in the bank because you're going to get nothing for that either. I mean, it's really complex and it's confusing. But if we are looking at potential hyperinflation, you've got to be invested in something, because you can't keep cash.
Exactly. You got to think bimodally, that you either have hyperinflation, not mild inflation, or you're going to have continuous deflation. So you got to think you need to be hedged for these two states, which makes things very delicate. And the first thing I would say is that bonds will hedge you against nothing from here on. Nothing.
Nassim, you were very smart early on to call for masking across the board. To the extent that you're focused on the COVID numbers and thinking about second waves or second order events, how do you see it right now?
Okay, well, the first thing is it's quite offensive to see that people are politicizing something like transmission of a disease. Like if you belong to a certain political viewpoint, then masks are bad, and for the other one, masks should be mandatory. I believe that without masks, We can't pull out of this because it is effectively transmitted in a certain way that require masks. And the other thing is people fail to understand the payoff from masks. Lockdowns are very expensive for society. Masks are not. It's like a free option. You see, and I think that we can really reduce the rate of transmission via masks. There's a lot of papers, a lot of evidence around. We've analyzed it. Actually, last time we were together, I said that masks are very convex. If they block just half the virus load, it may reduce the probability of infection up to 95%. So masks, bilateral mask. I have a mask, you have a mask. Jointly, we definitely bring the rate down. There's also the ethics of it. If I'm not wearing a mask to protect myself, I am wearing a mask to protect society from the pandemic. First order, to protect you if I run into you, but also to protect the society, because it is multiplicative. Every person you infect, if you don't have a mask, will infect many more. At this point in time, we don't know exactly how many more, but definitely more than one. So you have to wear a mask. And I think that had they realized early on that would have saved us a lot of money, a lot of trillions, a lot of money would not have been printed had they understood the role of masks. Look at Asia, the Taiwan, places that were very, very, very the center of the epicenter.
Nassim, we always love talking to you and love your perspective. I'd love to continue this conversation and have you back so we can talk more about where we are all headed. But we appreciate it and have a great weekend. Talk to you very soon.
Great. Thanks a lot. Have a good day.
Thank you, Nassim. You bet.
All right, coming up, a fork in the road for Ford. They should take it. The automaker completely revamped one of its cash cows, the F-150 pickup truck, but it's also facing increased competition in the red-hot pickup market. I think I want one of those Teslas. I don't know if I can get one. But anyway, we're going to hear more in a First on CNBC interview with Ford's Chief Operating Officer, Jim Farley, when Squawk Box returns.
It started in 1898, helping clients and communities invest in hospitals and schools, roads and bridges, farmland and forests, small and large businesses, and sustainable cities around the globe. It continues today, more than 120 years later, investing to make an enduring impact on our world.
In today's climate, you need to evaluate all financial options. Consider a balanced transfer card. By utilizing a 0% APR, you'll pay down debt faster and keep your credit score intact. Explore your best options. CNBC Select, the stories you need for the smartest way to handle your credit.
People love the Hurricane, the #1 selling cane from coast to coast.
I love my Hurricane.
I love how secure I feel with my Hurricane.
They love how it helps them walk safely on any surface. And they love how it stands on its own. They love how it folds and unfolds in seconds.
I love my Hurricane.
Order your Hurricane at our legendary low price with a 100% money-back guarantee plus free shipping. Go to hurricane.com. That's hurricane.com. Also available at these fine retailers.
Looking to refinance your mortgage? The first thing you want to do, find out how much your home is worth.
Just go to ownerly.com, enter the address, and see the home value instantly. Come to ownerly.com and see what your home is worth for free.
This is a crate from KiwiCo. Each crate has an awesome science, art, or engineering project inside. Parents can order online and it ships right to your door. Learning has never been so fun or convenient. Get 30% off. Visit trykiwico.com.
Ford launching a new entry into the pickup truck wars, a critical slice of a highly competitive auto market. Phil LeBeau is here. He joins us right now with a special guest. Phil, good morning.
Good morning, Becky. Let's bring in Jim Farley, COO of the Ford Motor Company. Jim, everybody's been waiting for this. The new F-150, first redesign, complete redesign in 6 years. How critical is it for this truck, which has so many functional and useful features that you've added? How critical is it for it to connect with buyers?
Very critical, Phil. This is our most important vehicle at Ford globally. It's important for the U.S. economy. No one builds more trucks in America than Ford. We built all of ours here. It's almost 1 million units. It's the U.S. most favorite automotive product and number one for 40 years now, more than 40 years. So huge for Ford.
So when you look at this and you look at pickup prices, full-size pickup prices, they're averaging about $50,000, right around there, when you ask for the latest numbers from the dealer groups. And at the same time, you hear people saying, is there going to be resistance? How much more are people willing to pay for an F-150? And yeah, I know they start down in closer to $30,000 if you're getting a very base model. But if you're getting these things loaded up, you're going well north of $50,000, right?
Yeah, absolutely. You know, what we found, Phil, is many of our trucks are used for work partially or fully. And it's a work tool in that case. People are happy to pay if the product is more productive. Now we have an onboard generator, for example. Those generators cost $10,000 or more. You don't need one anymore with an F-150. You can power the whole job site. So, you know, it's an optional package, but it's a portion, a small portion of what an online generator would cost. So, you know, we see this as content like we have with aluminum F-150 for more payload and towing. This is a content that people want, and they're more than willing to pay for it.
Jim, let's talk about inventories. Adam Jonas from Morgan Stanley out with a note yesterday. He quoted a Ford dealer anonymously in the Northeast who was saying, look, I am not going to have enough inventory in order to stay open next weekend. I'm just going to shut down on the 4th of July weekend, which, as you know, is one of the top 2 or 3 sales weekends in the auto business. How tough is it with inventory right now? And why are you guys, according to this dealer, struggling to come up with enough of the key models like pickup trucks?
Well, actually, our production is up to essentially full capacity now, Phil. This week was a really key breakthrough week for us in capacity and our production. We're in good shape across the country. We're about 75 days supply. It's a little bit light, but compared to some of the competitors that are plumb out, we're not. We are facilitating a lot of dealer trades, helping our dealers move product from one dealer to the next to make sure we have inventory. But I guess I would say we're open to business and we're in good shape for inventory. It is different dealer by dealer, so we'll call around, we'll get that inventory.
Hey, Jim, you guys give us the Q2 sales next week, and there has been a rebound in the last 6 weeks, especially coming off the shutdown in April for the economy in most parts of the country. Do you expect that to continue in July and August, or how concerned are you that as we see these cases flare up, especially in the South and the Southwest, we might see a pullback in demand?
It's too early to tell, Phil. I mean, the retail industry has come back, as you said. It's still lower than pre-COVID levels. We're planning our business at that kind of lower level. But for us, what's really encouraging we saw in June, and we expect it to continue, is a recovery of fleet, not rental, but large fleet deliveries, government, large oil and gas, companies like U-Haul. We're starting to see that demand really come back. Ford is #1 in that market. It's very important to our profitability. In June, we really saw that business come from like 30% of normal to more like 45 or 50% of normal. That's an encouraging sign for us. Retail, too hard to call.
Hey, Jim, we only got a few seconds here. Are we on track to see that electric F-150 within 2 years?
You betcha. And it is a spectacular product. A lot of attention on battery electrics, but ours is going to be built Ford tough. Not anyone else can't say that.
There's a tease for you. Jim Farley, COO of the Ford Motor Company, talking with us first on CNBC. Thank you, Jim. I know we'll be talking with you more as you work towards that electric F-150. Guys, this will be interesting to see what we see in the pickup market over the next couple of years, because it is really heating up in terms of the competition.
Okay. Phil, thank you so very much. We didn't find out. Is there a vacuum cleaner? Do we know if there's a vacuum cleaner?
Good Lord.
Inside?
You've got a generator. You can bring one of those little vacuums. If you were worried about vacuuming a truck when you're tailgating, something's wrong. Something is seriously wrong.
These are the questions that happen in the Sorkin family. We're having a conversation about a minivan in our family. Come on. Okay.
Well,
Phil,
that's
great to see you. Have
a
a great
different
weekend.
equation. You too.
I know. The kids would, by the way, I think like the pickup better than the minivan. Coming up when we return, Verizon becoming the latest company to pull its ads from Facebook. We'll tell you why the telecom giant is stepping away. And New Jersey Governor Phil Murphy joins us to talk about the reopening in the Garden State and what school could look like for your kids next year. And new guidelines asking some travelers to self-quarantine. We've got all of it when we come back on the other side. You're watching Squawk on CNBC.
At Amica, we believe in life's extraordinary experiences. We're an insurance company that delivers an experience that meets the only standards higher than ours. Yours. Experience Amica. Auto, home, and life insurance.
Mass Mutual Health Bridge is a free life insurance program just for healthcare workers fighting COVID-19. Learn more at massmutual.com/healthbridge.
What can employers do to best position themselves?
With every company in every industry, digital transformation has to be on the CEO's agenda.
This is a game changer. Not having an intentionality right now will be a critical mistake.
With daily insights on the new now, this is Business Interrupted with EY.
As the pandemic has unfolded, we've just seen this extra rapid pace of adoption of certain technology. Everybody had to think about grocery delivery, video conferencing, and telemedicine. E-commerce and video meetings are now part of the fabric of culture around the world. That's not going to change. At CNBC, we really remain committed to watching the data and bringing our readers and viewers the information that's most essential.
Welcome back to Squawk Box. Take a look at futures right now. Dow looking off about 150 points right about now. NASDAQ off just slightly. It had been in the green before. S&P 500 off just a little bit as well. Joe.
Andrew, a coalition of nonprofits, including the NAACP and the Anti-Defamation League, are calling for brands to pause ad spending on Facebook. And the biggest advertiser yet has just joined the boycott. Julia Borston joins us with the details. Good morning, Julia.
Good morning to you, Joe. Well, Verizon is joining in on this campaign to, quote, demand that Facebook stop hate for profit, calling on the social media giant to take greater steps to pull down racism and hate speech. Verizon saying, quote, we have strict content policies in place and have zero tolerance when they are breached. We take action. We are pausing our advertising until Facebook can create an acceptable solution that makes us comfortable and is consistent with what we've done with YouTube and other partners. Now, Ben & Jerry's, REI, and Patagonia are among the nearly 100 companies that who, at the Anti-Defamation League and the NAACP's encouragement, have pledged to stop advertising for the month of July. Now, Verizon is going one step further by pausing its spending indefinitely. Now, Facebook's advertising, and Verizon is also the biggest advertiser of the protesting brands, is spending about $2 million between Facebook and Instagram in the last month, according to Pathmatics, an analytics firm. Now, Facebook's advertising chief, Carolyn Everson, saying in a statement, quote, we respect any brand's decision and remain focused on the important work of removing hate speech and providing critical voting information. Now, in an email Everson sent to advertisers last week that CNBC obtained, Everson wrote, quote, boycotting in general is not the way for us to make progress together, we do not make policy changes tied to revenue pressure. We set our policies based on principles rather than business interests. Now, Everson stressing in this email to advertisers, Facebook's making a lot of progress on these issues, removing 89% of posts that violate hate speech policies before anyone sees them, also doing a civil rights audit every year since 2017. So Facebook is really trying to show advertisers that it takes their concerns seriously, but also that it doesn't want to just fold to pressure. Becky?
Julia, they can say that all they want, but if you see other big companies like Verizon that step into it, do you think that behind the scenes this is having an impact at Facebook?
Well, it's certainly having an impact in terms of the way Facebook is reaching out to advertisers. It's not just this email that I obtained. I know that Everson, Sheryl Sandberg have personally been calling many people across the ad industry, both brands, agencies, trying to tell them that they take these concerns seriously. I think part of it is trying to show how much they feel they've already accomplished in terms of how much hate speech they're pulling down. But I think it's possible that we will hear more from Facebook, either about how they're trying to improve diversity internally, which they've been talking about, or how they're going to be more transparent about what it is that they're taking down. So this is definitely something that they're watching, and it'll be interesting to see if any more really big advertisers join in this boycott in the next couple of days. It's scheduled to start on the 1st.
Okay. Julia, thank you. Good to see you. When we come back, New Jersey Governor Phil Murphy joins us live on the Garden State's reopening process and that new travel advisory for people arriving from virus hotspots in New Jersey, New York, and Connecticut. Stay tuned. You are watching Squawk Box right here on CNBC.
Can I find an investment firm with a truly long-term view that's been through multiple market cycles for over 85 years? With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
My name is Christine Payne. I'm an associate here at Amazon. Step into the blue line, sir. This device is giving us an accurate temperature check. You good to go? I have to take care of my coworkers. That's how I am. I have a son, and he said, one day I'm going to be like you. I'm going to help people. You're good to go, ma'am? I hope so. It's my passion. If I can take care of everyone who's sick out there, I would do it in a heartbeat.
Introducing Schwab Stock Slices. For as little as $5, now anyone can own companies in the S&P 500, even if their shares cost more. At $5 a slice, you could own 10 companies for $50 instead of paying thousands. All commission-free online. Schwab Stock Slices, an easy way to start investing or to give the gift of stock ownership. Schwab, own your tomorrow.
Hey, guys. You know Robert, Tracy, and of course Mark, who delivers our sandwiches. Hi. What's up? Why is Mark here? You said to get this merger done, I should ask Mark. I said ask Markham.
Ever wonder where the people with all the answers get all the answers? Ask Markham, accountants and advisors.
Squawk on the Street examines worker attitudes.
Would surprise you if we get a spike in retirements because they've been at home and kind of liked it.
Business reopenings, trading action at the bell. Today, watch and listen live on the CNBC app.
Hey, did you?
Yep, done.
And the?
Of course.
And?
Oh, yeah.
All in one
hour.
Behind the world's most productive people is the world's most comfortable chair, the incredible X-Chair, featuring patented dynamic variable lumbar support. X-Chair's adjustable seat depth keeps users small to tall, comfortable and supported. Available in breathable mesh, HDR foam, or top grain leather. Customize comfortable positions for your neck and arms. And X-Chair's patented SiFloat Infinite Recline provides the perfect recline for users of almost any size. This is not your grandfather's office chair. X-Chair supports workers everywhere who find themselves now working from home. Call or click to get $100 off the amazing X-Chair featuring dynamic variable lumbar support. Plus, for a limited time, you can also get free same-day shipping. This deal is good for any X-Chair you choose. Create the world's most comfortable home office with X-Chair. Call or click to order today and receive a 30-day risk-free trial and $100 off.
Welcome back. We're about a half a minute away from personal income and spending data for the month of May and a new look at core PCE prices. The futures are about where they were. NASDAQ just barely hanging on to a fractional gain, while the Dow is down triple digits, about 143 points. S&P off 6. The 10-year note, we're going to Santelli. We know, ooh, devilish, 666. Rick Santelli standing by at the CME in Chicago. Rick, the numbers, please.
Yes, our May read on personal income and spending. And of course, we know the spending accounts for about 2/3 of the economy, a consumption-driven economy. And what we're waiting for, of course, is, here we go, minus 4.2 on personal income, minus 4.2. And, you know, if there is any good news here, I guess the good news would be that minus 4.7 is the all-time low going back to 1946. We didn't quite challenge that. This is actually a better number than we were expecting, it down 6%. Maybe the worst feature here is that we're having this back-to-back issue. The 10.5 that, at least for this point in time, still unrevised, for last month was the all-time high. So we go from the all-time high to just shy of the all-time low at minus 4.2. On the spending, a completely different story. On the spending, in any states that are partially reopened, like parts of where I live, boy, it's like stores can't keep inventory. 9.3 expected, 8.2. So it's a bit of a disappointment, but it's still a whopper of a number on spending, 8.2. As a matter of fact, the all-time high going back to 1959 is only up 2.8. So we just kind of blew that record away. And once again, it is following a 12.6 that is the worst ever. So the same dynamic in reverse with income. On the year-over-year issues we really want to pay attention to on the deflator, it is up 0.5%. And the reason I find that important is because we're trying to all handicap what the world of inflation, deflation is going to look like as we get through the coronavirus. And as far as yields, yes, Joe, we're right around 66 basis points. What's interesting is that most maturities outside of the 30-year bond, their settlement yesterday and their settlement last Friday were exactly the same. So we are down on the week and down on the day on all maturities. And maybe the most depressing news that I think the fixed income sovereign market is sending everybody is that with yields so low, so close to all-time low closing yields, it really isn't instilling confidence. You could say what you like about rising rates, but rising rates in the current environment we're in, even acknowledging that the Fed could squash any rise in rates it wants at any point, I'm not sure that's their desire, but that would give us a little bit more confidence. And of course, that needs to be paired with an equity market that seems to get its sea legs back. We'll have to pay attention if it could turn in the green today. Becky, back to you.
Hey, Rick, thank you very much.
Going to Beck. Okay.
Go ahead, Joe.
Well, I just think he was trying to say that for the stock market, it would be better if yields were higher. Okay, that's all back. Anyway, over to you. Is that right, Rick? If I got that was in summary for a Friday? I heard you say desire.
Yeah,
but you didn't say higher.
Yes, you have it right.
Okay.
To get our moods higher, to get the economy higher, we want stocks and interest rates higher, and of course, we all want to get back to normal and get not only the economy, but everybody get back together at some point. Maybe play a little baseball in the future, huh?
60 games, maybe, right? Cubbies. All right.
Yes.
See ya. Back.
All right, thanks, Joe. We are now going to get an on-the-ground look at how the economic recovery is progressing as states embrace phased reopenings around the country. For that, we welcome Governor Phil Murphy from New Jersey. He's been watching his state open up after 4 long months. And Governor, thanks for being with us this morning.
Good to be with you, Becky. I'm still recovering from Joe's Mariah Carey impersonation there, so please bear with me.
We're a little goofy this morning. It's a Friday. It's been a long 4 months for all of us. But we have been talking today about how when you get out there, you really start to see people who are back out in restaurants again, going out shopping, out at beaches and at parks. And I just wonder, as you watch this, if you worry that we're going to see a rise in cases and what numbers you're watching, how you're measuring this to decide if we're doing this the right way.
Yeah, first of all, seriously, it's good to be back with you, and we do worry, which is why we've been taking this in very specific phases in terms of reopening. Outdoors is a lot less concerning than indoors. That's not to say there aren't concerns outside, but the concerns pale in comparison to, say, inside, lacking ventilation, sedentary, close proximity. Those are bad characteristics for this virus. The things we look at most closely in terms of our guides are rate of transmission. If it's under 1, that means less than one other person is getting infected. If they're in contact with someone who has got the virus, the spot positivity rate, meaning what percentage of folks getting tested are actually positive for COVID-19. And thirdly is new hospitalizations. Those are the 3 here and now data points. We look at a lot of data, but those are the 3 that matter the most.
We have seen things get a little out of control in states like Texas, Florida, Arizona, even California. You're starting to see some real pickups in these things. And earlier this morning, we spoke with Dr. Scott Gottlieb. I know you're familiar with Scott, and you know him well. He said that contact tracing is not being done very effectively in a state like Texas. They don't know why young people there are getting it or where they're getting it, if it's from bars, if it's from being outside, if it's from anything they've done at parties or other places, and it's a lot of guesswork. How prepared are you in New Jersey in terms of contact tracing to try and figure out if there's a spike in cases, where it's coming from and why?
Yeah, I mean, I can't speak to the specifics of Texas. Scott is a great guy and has been a great advisor, a Jersey guy, by the way. We have since day one, remember, none of us had any of this at the beginning. So if you're looking for a source of comfort, folks, or silver lining, it's testing, tracing, plans to isolate folks who have the virus. We had none of that as a country or as a state 3 or 4 months ago. We now test in the top couple per capita states in the nation. With the great help of Rutgers, our flagship state university. We're adding meaningfully to the already 900 contact tracers we have. We hope to get up over 2,000 within the next couple of weeks. I hope and believe that our approach will be effective. Again, our numbers have gotten, notwithstanding the loss of over 13,000 people, it's hard to believe we've lost that many in New Jersey alone. Our numbers have gotten dramatically better. So we've been able to do the contact tracing up until now, at least, with local and county tracers. We have 900 of them on the field. So far, so good. But we want to make sure we've got a capacity that looks like our testing capacity, just in case. And I think we all have to be prepared for this. We hope for the best, but prepare for the worst, that this is going to flare up. And we need that tracing infrastructure in place. Anecdotally, again, it's far more concerning inside than outside, at least in New Jersey. I can't speak for Texas. That's where our biggest concerns are.
Governor, you have a press conference later today to talk about the schools and a plan for getting the schools ready for a fall. Do you think schools will open in September?
I do, Becky. We want them to, and I do believe they will. Again, you can't, we're a couple of months out. So imagine predicting in late April what late June would look like in America. Probably none of us would have gotten it right, good or bad. So with that big caveat, 2 months out, I believe we will be back in school. It will be a new normal. There will be protocols in place that have not been in place before. But as good a job as our state did under really challenging circumstances in terms of virtual learning, there's an enormous desire and appetite from educators, parents, kids to get back to school, and God willing, that's what we will do.
How do you do that and properly social distance? Is the school day going to look the same? Will the kids be there together? Or are you looking for other places to try and house students? How are you proceeding?
We'll get into that in a fair amount of detail this afternoon, but it'll be a combination of some of those very things. There's going to be obviously a big emphasis on social distancing. The hardest nut to crack, we've seen this in long-term care, we've seen it in society generally, is the asymptomatic, healthy young person unwittingly passing the virus to someone who's in an older generation and or someone with other underlying health issues. And that's the one that we've got to be most cautious about. And again, we'll get into that later on today.
How does that play out just in terms of sports? Because for high school sports, a lot of those practices start next month and well into August. Watching how we've seen some of the concerns that have propped up with college football that's already back practicing and some of the coronavirus spread there. Do you have a plan for that?
Well, we started non-contact sports this past Monday. In terms of practices, we are going to go live with actual games, and there's going to be a great baseball tournament called The Last Dance, mimicked from the Michael Jordan ESPN drama, which is essentially going to mimic what would have been a high school tournament in the state. We got to do it carefully, though. I mean, all of this is, we've got to take incremental steps. This is a virus that no one knows everything about, even the experts like Scott and others. We're learning as we go, and we've got to, again, the benefit of being incremental is you can learn more easily from a given step that you've taken, and sports will be no different from that.
Governor, watching what's happening with the travel advisory that you, along with the governors of New York and Connecticut, are putting in place now for anyone who visits or comes from a state with a high transmission, they've got to quarantine for 14 days when they come back to one of these 3 states. Is that payback for what Florida was doing before, for what Rhode Island was doing before? And how do you actually enforce this? President Trump says when he comes to New Jersey to his golf club, it doesn't apply to him because he's not a civilian. How will you be out there enforcing this?
Yeah, we had a little bit of a different take than the president, but there is a carve-out for essential workers, and by any definition, the president of the United States is an essential worker. So the president is welcome, obviously, in New Jersey. No, this is not payback at all. And by the way, we wish nothing but we pray for Florida. We pray for any of the other states that are having outbreaks right now, that they, please God, are able to get to a better place as fast as possible and save as many lives as possible. It's very simple. We have gone through hell. New Jersey, as I said, has lost over 13,000 folks. New York, even more. Connecticut, a huge number. None of us want to have to go back through that hell again if we can possibly avoid it. And so what we're asking is for folks to do the right thing, personal responsibility. If you know you've been in a state with a high positivity rate or a high number of new cases, do the right thing. Come back, self-quarantine, and get tested. In New Jersey, as I mentioned, we have built a testing apparatus and capacity unlike any American state. Let's use it. And if folks have been in a highly infected part of the country, let's get them to get out, go tested, be by themselves, let this period run through, and again, do the right thing and be responsible. We call it common sense for the common good, not just for yourself or your family, but for the community at large.
Governor, I just wanted to ask you about the voluntary approach to all of this and the idea of common sense. And frankly, I think if we're being honest with each other, there's been a lot of common sense that has not been used throughout this pandemic around the country, and that's one of the reasons that we're in this mess and situation that we're in. The reason I ask it, or the reason I raise this question is, to the extent there are going to be people coming in from states that are high risk, in other countries, and we can talk about liberties and freedoms, but in other countries, if you were going to have people flying in from Florida, rather than do a 14-day quarantine, you would test them on the spot. When they land at Newark, you would test them, and then you would trace them. And it doesn't seem like there's any actual procedure or mechanism to do that. There doesn't even seem to be a tracing mechanism for people who are flying in to these places. Now, people can drive in from other places, I know, but why aren't we being more stringent about this?
Listen, we don't have the constitutional ability to put roadblocks up on our borders, as you rightfully point out. I would just say this: common sense and personal responsibility have actually overwhelmingly been the words that have defined how New Jersey, and I know New Jersey the best, obviously, has performed over the past 3 or 4 months. We've asked folks to stay home. They stayed home. We've asked them to keep social distances. They did. We asked to wear face coverings when they go out. They wear them, particularly when they're indoors. Wash your hands with soap and water. This is yet another ask of ours. And again, it's a lot of responsibility. We get that. But folks have overwhelmingly done the right things, and I believe they will continue to. This is it's not a hard one, right? So you know that if you've been in a state with a high level of infection, you got to say to yourself, okay, I get it. I'm going back into. I don't want this to get into my family or my community. I'm going to do the right thing, and folks have done that, and we put a lot of faith in our folks. So far, it has paid off. Have there been knuckleheads? Have there been folks who didn't comply? Of course. But overwhelmingly, folks have complied. We wouldn't have the numbers today, which is among the lowest positivity rates, among the lowest rates of transmission, among the lowest new hospitalization rates in America, if folks hadn't done the right thing, and I believe they'll continue to.
Governor Murphy, thank you for being with us this morning. Obviously, we're watching this state and every state very closely as this proceeds, but we appreciate your time today. And we'll talk to him soon. Again, that was Governor Murphy from New Jersey. Andrew?
Okay, thanks, Becky. Coming up, is the aviation sector about to get another federal injection of cash? That is the question. Coronavirus still weighing heavily. Unions representing tens of thousands of workers are calling for billions in new aid. We'll bring you the details on that next. And as we head to a break, check out shares of Nike. The Dow component missing, estimates badly on both the top and bottom lines for its latest quarter, with sales hurt by the lockdown-related store closures. Stay tuned. You're watching Squawk Box right here on CNBC.
Many U.S. tech companies are global leaders. In this constantly changing sector, it's hard to know which companies will gain, maintain, or lose industry leadership. So why choose? The Technology Sector Spider ETF offers the diversification of the entire technology sector of the S&P 500 while reducing single stock risk. The Technology Sector Spider, the next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully.
There's a lot of sameness among online brokers these days. IBKR stands out in the crowd. We offer the lowest trading and borrowing costs. Our clients have the choice of investing globally or locally in stocks, options, futures, forex, bonds, and funds from a single integrated account. Our premier technology enables you to optimize speed and efficiency, perform sophisticated portfolio analysis, and manage your accounts. Start investing today at ibkr.com.
In Peytonville, there's lots of ways to save on auto insurance.
Really?
Yep. Very proud of that. With Smart Ride from Nationwide, they can get discounts for safe driving.
Does she get one?
Mrs. Carmichael, safest driver in Peytonville. Takes a lot of work and effort to be the safest driver in Peytonville.
What about this guy?
With Nationwide Smart Miles, the less he drives, the less he pays. The list of inspiring stories goes on and on.
I bet. I've never seen anyone do more with their retirement than you.
I concur.
Financial success and financial literacy often go hand in hand. Yet research shows Black Americans' knowledge of saving and investing lags significantly behind whites. And those who need financial education the most often have the least access to it in school. There are free resources available. Check out Next Gen Personal Finance and the National Endowment for Financial Education for free materials.
Let's bridge the gap together.
Welcome back to Squawk Box. Now we're right across the board. NASDAQ has now turned negative, down 2 points, 2 and change. This would be a down week if we were to end this way. The second, 2 out of the last 3 weeks have been down weeks. The Dow is indicated down about 165 points, and the S&P indicated down about 9. I'll toss it over to my knucklehead friend. You know what I'm noticing, Andrew? That knucklehead is making a big comeback. It sounds old-fashioned, but it's cable-ready.
It is old-fashioned.
It's old-fashioned, but it's cable-ready. And I was just talking to the producer about all the words that are not cable-ready that it replaces. Have you thought about it? And I'm going to start using it because it's a gentle, you're a knucklehead.
Knucklehead.
You know what? For people on the air, if you're groping for something and you don't want to, have an HR problem, I mean, what is a knucklehead? I'm trying to figure that out. This is, but I want to hear, let's start using that. If we ever mad at each other, I'm going to say, oh, Andrew, you knucklehead.
Just knucklehead. You knucklehead.
You knucklehead.
I'll use it. We use it a lot. Okay.
We may need more than one, but I like it. And I like the governor. He's
Let's talk about retail for a moment, because Gap shares are jumping this morning on news that the retailer is teaming up with, you ready for this, guys? Kanye West. In a multi-year partnership, the rapper and fashion designer will create a Yeezy line of clothing aimed at young shoppers. Gap says Yeezy will receive royalties and potential equity based on sales results. Yeezy says the brand is valued at $2.9 billion. And guys, this could be a big bet for the Gap. you know, it's arguably had a fallow period, and maybe Kanye will bring it back.
Wow.
Yep.
You know, Kanye, the Kardashians, this is like when Cody was up 16% on news that one of the Kardashians, was it Kim, or who was going to be getting involved with it too. Like 16% is the basic improvement in market cap if you get involved with the Kardashians or with Kanye.
I mean,
well, look, you could argue, by the way, what he did for Adidas even. I mean, if you think about where Adidas was probably a decade ago now, before Yeezys, and sort of the ascension of that brand, could happen to the Gap. We'll see.
Could use it, yeah.
Yeah, it'd be something to watch. Also, guys, some worrying news for the housing sector. The number of borrowers delaying their monthly mortgage payments because of the coronavirus rising sharply. Data and technology firm Black Knight says that active forbearance plans shot up by about 79,000 just in the last week. That erases roughly half of the improvement that we've seen in those numbers since they peaked late last month. As of Tuesday, about 4.7 million homeowners were in forbearance plans, or about 8.8% of all active mortgages. That represents $1 trillion in unpaid principal.
Meantime, there are new calls for billions of dollars in aid from unions representing tens of thousands of aviation workers. Phil LeBeau is back with us and joins us with the details on that. Phil.
Andrew, this is a letter that has been sent by the representatives who lead 6 airline and aviation unions. We're talking about the pilots, the flight attendants, the ramp workers. So many of these union workers who have had their jobs guaranteed through September 30th will not have those job guarantees come October 1st. So as a result, they have written members of Congress, and they have said, look, we would like you to extend that payroll guarantee through March 31st. Now, the amount they're seeking is not clear in the letter, but they seriously believe that they have a shot at getting Washington to provide another airline bailout. I'm not sure that's going to happen. When the first one came around, everybody said, well, this will tide the airline industry over until we see demand in travel come back. And many people early on thought it was going to snap back this summer. Take a look at the latest passenger levels. We just got this from the TSA. The most recent level is 623,000. We don't have it right now. Guys, that's down 77% compared to where the industry was a year ago. So when you take a look at the airline index, that's the reason why, while it had a little bit of a comeback here about 4 weeks ago, it has basically flatlined there at the level you're looking at. They have increased their debt borrowing. The airlines have. They've now borrowed more than $40 billion in order to get the airlines through the next couple of years. And part of their equation right now is that if traffic doesn't come back, they're going to have to cut payrolls substantially come October 1st. And that's why you have the unions, guys, going to Capitol Hill saying, let's have another round of payroll benefits extended to the airlines, which would likely be for billions of dollars. And as I said earlier, there's not going to be a whole lot of appetite in Washington, despite the importance of the airline industry. I think a lot of people look at it and they say, we gave it to you once. I'm not sure we want to go back to the well and do it again.
Hey, Phil, what about the appetite just from the airline executives themselves? Are they on board with this, or is really this coming from the unions saying,
this is coming from the unions
are going to come?
This is coming from the unions.
What have the executives said about it?
Well, officially, they will sit there and say, well, that'd be wonderful if Congress would like to help us. Unofficially, Becky, I spent last night talking with several airline executives, and they all said the same thing. They said, look, it was a Herculean task to get Washington to give us a bailout back in March and in April. I'm not sure they're going to be on board again. And how much political capital do you want to spend trying to get that to happen? They don't want to lay off people, but at the same time, they realize the landscape that is out there politically.
Yeah, not to mention that every time the bailout money comes, it comes with a lot of strings attached that I think the executives are not fond of. And yeah. Okay, Phil, thank you. We'll continue to watch. Up next, though, we'll tell you what to keep an eye on ahead of the opening bell on Wall Street. We've been watching the futures this morning, and for most of the morning, the Dow's been under pressure, actually all morning. In fact, now it's down by about 180 points. S&P futures down by 10.5. The NASDAQ had been hanging in there, but now it's indicated down by about 10 points as well. It is Friday. Stay tuned. You are watching Squawk Box on CNBC.
USAA was made for right now. Right now is a time for action. So for a second time, we're giving members a credit on their auto insurance because it's the right thing to do. We're also giving payment relief options to eligible members so they can take care of things like groceries before they worry about their insurance or credit card bills. Right now is a time to take care of what matters most, like we've done together so many times before. Discover all the ways we're helping members at usaa.com/coronavirus.
Land Rover, above and beyond.
On Closing Bell, your volatility playbook.
When it is this shape, it does tend to say that the market's a little bit unsettled.
See what's driving the action and how to play it now. Closing Bell, 3 Eastern. Watch and listen live on the CNBC app.
Good morning, everybody. How you doing?
Here's a hint about how to make working from home less stressful and more comfortable. Make the switch to X-Chair. No matter where you put the amazing X-Chair, it instantly becomes the most comfortable place in any space. Infinite side-float recline and dynamic variable lumbar support make the X-Chair a customer favorite at home and work. Don't forget, the X-Chair lets you customize for the same measure of amazing comfort no matter what your size. And every model is in stock, ready to ship the next day, so you can join the thousands of others who have discovered the joy of working in comfort. Once someone sits in an X-Chair and feels the amazing DVL support, it's almost impossible to get them out of it. But don't worry, you don't have to share because there's an X-Chair for everyone. And you can get $100 off any model on our website. Your new normal? Incredibly comfortable. Call or click to order today and receive a 30-day risk-free trial and $100 off.
We're a little more than a half hour from the opening bell on Wall Street. Joining us now is Paul Zemsky, CIO at Voya Investment Management. All right, we got about 3 minutes, a little bit less, Paul. So, you favor stocks over bonds. We just had someone say bonds got nowhere to go, and it shouldn't be hard to figure that out when we're range bound, almost down at zero. So stocks look good, but what about the move that they've already made? You don't think a huge pullback is in the cards? You think 2,900 would be healthy or normal on the S&P?
I'd be a buyer. Absolutely, I'd be a buyer at 2,900. Look, the market's getting a little spooked by what's happening with COVID. That's the rising cases. I think it's perfectly natural. I believe that we're not going to see wholesale shutdowns of economies anymore. There'll be regional hotspots, and that's giving the market a little spook. So, yeah, we could easily trade off to 2,900. I think we'll see buyers there. I think a lot of people missed this. It was a rocket ship up from the lows, and I think people would like to get back in. So I'm staying overweight stocks, and if I saw a big pullback, I'd probably buy some more.
You might buy some high yield or investment grade corporate bonds, or maybe some cyclical stocks. That might be part of an asset mix.
Absolutely. I'd be buying corporate bonds here. I don't think you need to wait to buy corporate bonds there. You're still getting about 2.5% yield on a 10-year triple B. Inflation's going to be 0 to 1. So you're getting a nice real yield, and the Fed's on your side, right? The Fed's doing everything they can to keep the corporate bond market stable, and they're buying hand over fist corporate bonds. So the Fed's got your back, and that's also going to help high yield. As yields come down in the investment grade market, people are going to buy high yield bonds, and that's going to be supported as well.
For risks, you mentioned that COVID could be more serious than what you're expecting. You also mentioned the election. What do you think? How does that play out, do you think?
Well, in the polls, you see Biden doing better if he was to win, and there's a good chance the Democrats take the Senate. I do think we'll see some reversal of tax policy, less favorable for corporations. Profit margins will be hit, so that is starting to be priced in by the market, but it's really not fully priced, and probably won't be until after Labor Day if it's really going to go Biden's way. So that's a risk, but I don't think it's front and center right now.
You think in some of the parts of the world that had the virus earlier, you're seeing what may happen here, and it's positive to you, what's happening in Europe at this point?
Yeah, so Europe, we were very worried about Europe, given they were late to the policy table. The ECB was late to ease. They were late to bring fiscal stimulus. But then you look at the purchasing manager indices that came out earlier this week. and Europe's in a V too. So Europe is bouncing back, which is great to see.
Right.
I still think the U.S. markets will do better than the European markets, but they've caught up this month. Europe's up while the S&P's flat.
Great. All right, we're going to end it there. Paul, thanks. We appreciate it. We'll keep it brief. Becky and Andrew, happy Friday. Great weekend. We will do it again.
Happy Friday, guys.
We'll
do it again.
4-day weekend. 4-day week.
What malarkey will we talk about next week? I'm trying to use an old word.
I wish we knew. Going forward. Squawk on the Street is next. Going forward.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli, Morgan Brennan coming to you live from various locations. Futures are south of the flat line once again as the market digests those bank stress tests, another record high in U.S. COVID cases, that earnings miss at Nike, and we'll get a Russell rebalance at the close. Oil is hanging on to 38. We just heard from Phil LeBeau a moment ago on the airlines, and he is back with some breaking news regarding American. Morning, Phil.
Carl, take a look at shares of American. The airline is announcing that starting on July 1st, so starting next Wednesday, it will fill its planes completely. Remember, until now, it has capped its load factor, or the percentage of seats that it would fill on a plane. It would cap it at 70%. Well, that's going to end as of next Wednesday, also adding about 1,000 flights to its schedule in July. So this is American saying we've got more people flying, we've got more demand, and it's time for us to fill these planes all the way. They stress that people are still going to be required to wear masks. They're still going to be pushing the fact that they're sanitizing these planes in between every flight. But the time has come for them to sell every seat, fill every seat, and no longer guarantee that it's capped at a 70% load factor. Guys, this is a day with a lot of airline news between this, the unions asking for another bailout, and the airline CEOs meeting with the vice president at the White House a little bit later on today.
Hey, Phil, how does it contrast with what Delta said yesterday and their guidance about adding flights at year-end, really adding no more than they'll have this August?
Well, it's unclear if American will continue adding flights in September, October, November. It may be that, look, we're going up to 4,000 flights in July, and maybe we cap it after that. Nobody expects us to see strong travel demand, or what I mean, a growth in travel demand in September and October, unless we see corporate travel come back. If that doesn't come back, then you're going to see incremental growth. And I think we have the latest passenger numbers in a chart here. It's up to 623,000 yesterday. That's a nice improvement from 87,000 at the low in April, but nowhere close to where we were a year ago. It's still down 77%. So what you're seeing right now are the airlines saying, we got to make as much hay as possible in July and August, because come September, unless things change with coronavirus as well as corporate travel demand, we're going to have to see things plateau, if not pull back slightly.
Phil will be watching that closely, and again, as Phil said, meeting with the vice president later on today. Morgan, go ahead.
No, I was just going to say, Phil, when I hear that this cap is being lifted, I mean, it certainly sounds like any kind of semblance of social distancing on planes, you know, blocking of the middle seat, et cetera, is going out the window here. And the fact that it's coming before this meeting at the White House today, where I know there's this back and forth around temperature checks and some of the other, I guess, safeguards and who will be responsible for them as well. The fact that they're lifting this cap, I mean, it sounds like American is confident that travelers aren't going to mind not being socially distanced and not having some of these other potential safeguards that haven't been hashed out yet. Is that the case?
You know, Morgan, I have talked with people who have flown on American in the last week, and they've said, look, the guy next to me, the seat wasn't empty, and there was a guy sitting next to me, but he was wearing his mask. We kept, you know, we weren't interacting, we weren't shaking hands. At some point, all airlines are going to have to approach this question. You're not making money if you're flying with the middle seat guaranteed empty. Now, I know that both Southwest and Delta have said that we're going to do that in order to make sure our customers are comfortable. But when you look at United, when you look at American, and there are going to be other airlines, they have made this decision that we're in the business to stay in business and to make money on these flights. And if we can sell every seat, as long as people are wearing their masks, we're doing the disinfecting, and we're promoting as much safety as possible, we're going to do that.
Yeah, Phil, and that comes on the heels of some reports earlier in the week that Southwest has launched a bit of a price war. I think $39 from Houston to, Houston, Fort Lauderdale, $99. So it's going to be, there's going to be bargains and a fierce battle for passengers. There's no doubt about that.
You bet. You bet. That's coming this summer, later this summer into the fall.
Phil, we'll talk to you in a little while. Thanks, Phil LeBeau, with a slew of airline news all week and a lot more coming our way today. Mike, it sort of brings up this downgrade of Boeing this morning out of Bernstein. They go to market perform. A second downgrade of Boeing in a couple of days, and their general attitude is travel's going to remain contingent on medical progress, and in their words, we'd rather be conservative here.
Yeah, I think it just reflects the general rethink that's been going on for 3 weeks now, let's say, in terms of the pace of reopening, what we can reasonably expect out of consumers' willingness to get out and around. And, you know, the airline sector, as a proxy, is down 25% from the highs of early June. Yes, up 50% from the lows in March. So I think this has been really what's been working its way through the entire market right now, which is just exactly what did we price in with that furious run to the highs in June, especially in the reopening plays. And then, of course, Boeing, you know, being on kind of the far end of this logic chain in terms of what does it mean for near-term travel? What does it mean for the balance sheets of airlines? What does it mean for longer-term demand for aerospace? So I do think that, you know, it pretty much is where we've been for a few weeks.
Yeah, I love when my funny faces get caught on camera in odd moments. But anyway, besides that, this is something I've been watching very closely as well, the fact that you do have the second Boeing downgrade in 24 hours. Also, the 737 MAX has been back in focus. We've had a number of analyst notes out about that in the last 24 hours as well, because there's this expectation, at least based on some reports out there, that you could, as soon as next week, see that aircraft that's been grounded for, gosh, how many months now? That you could actually start to see those recertification flights happen, at least here in the U.S. next week. What that's going to mean not only for Boeing and for the airlines, if you actually see that come back online in the next couple of months, but also what it's going to mean for a company like Spirit AeroSystems, which is the biggest supplier to that particular aircraft. You saw Spirit pop yesterday. It was up more than 4%, in part because there was news of a deal, a collaboration with Virgin Hyperloop. Speaking of alternate types of transportation, but 68% is what it's down year to date. It's down 15% over the past 5 days, and that's because it has asked its lenders for financial relief earlier in the week after Boeing has once again halved its production orders from that name. So you've seen a lot of pain in the supply chain as well. I'd also just note this downgrade today on Boeing, one of the things they mentioned was compressed margins in the defense business, and defense has been selling off too, in part because of one of those broader market risks that we've been talking about, which is the election, who wins the presidency, what that means in terms of the makeup of Congress come November, and thus defense budgets.
Yeah, and actually, Morgan, given what's happened to the commercial side of Boeing, you had a lot of analysts say that, you know, the defense business was actually a larger portion of the overall value that the market's assigning to Boeing as a whole right now. So it becomes more of a swing factor there. I do believe there was something maybe introduced in the Senate about kind of an across-the-board defense budget cut. Not going to happen very soon.
That's right.
But yes, that is kind of the unfriendly headline flow with regard to the defense industry.
Hey, Mike, when you put this week into some perspective, you think of what's been handed to the market. Disneyland's opening delayed. Apple's reclosing stores. Obviously, the record highs on COVID, including Texas and Arizona. No real medical news, per se, in terms of breakthroughs. Microsoft's on the tape now. They're going to start closing some stores again. And yet we haven't really violated the 200-day. What does that say?
Yeah, it basically says the market went into the kind of high liquidity, low growth mode of leaning on the big growth stocks again to some degree. Also, I do think the market's a little bit less sensitive with regard even to the reopenings and the rising infection rates, because it's waiting to see whether it gets traction in the consumer data. It's starting to, right? You're starting to see some of those restaurant reservation numbers and mobility data in certain cities kind of roll over off their recovery highs. So I think that's one of the reasons that the market has been able to hang in there. If you just look at where corporate credit is setting the floor on valuations for equities, that gets you some part of the way toward FANG-like stocks working in the absence of whether the banks can take off again or the travel sector or the retails. But it's really become much more of a split market again. You could kind of cast it as this very favorable rotation type activity, this self-preservation of the markets, or, you kind of, I mean, how many price target increases are you going to get on Amazon and the other trillion-dollar giants, and how often are they going to work? I mean, I think that's kind of that says a lot about where the S&P goes from here.
Yeah, and of course the outperformance in the NASDAQ, which is poised, at least right now, to end the week lower, even as, based on the action we're seeing in the futures market right now, the S&P and the Dow are poised to finish this week, this last full week of June, lower. Mike, to that point, it seems like there's just a lot of conflicting headlines for investors to digest here, especially today. I mean, you got the virus spread in the Sun Belt states here in the U.S. You got the capital allocation restrictions from the Fed on the biggest U.S. banks. And then, of course, you have this rebalancing by pension funds with this Russell reconstitution that's expected to bring a surge of volume today. And then, of course, we're going into a weekend, given the fact that there is all this uncertainty around things like coronavirus. I thought what you said on Closing Bell yesterday was particularly interesting, this idea that the past month has been consolidation for the S&P, and yesterday, and it looks like potentially today, too, it's a pause within a pause.
Yeah. That's the way it seemed, right? I mean, the market has kind of gone sideways here. And yes, everyone's expecting this reallocation flow out of equities on a short-term basis. And maybe a lot of that's already gotten done, Morgan. But, if you look at the average stock in the market is down 12% or something since the June 8th high. So there has been a little bit of that digestion under the hood, a little bit of stocks coming off the boil. You've skimmed a little bit of the short-term froth off of sentiment as well, but maybe not all of it. And so I think that's allowed the market to kind of get its legs back under it. But very low conviction, very low liquidity. It just seems as if the market gets a little bit whippy and not really sure what it's responding to in real time. You saw multiple mornings where you get a sell-off mid-morning because there was some news on Texas or Florida infections, and then it immediately gets unwound. So it's a little bit touchy, but overall, if you backed up, you say, well, the market's acted like it has in these early bull phases in the past. It won the bulls the benefit of the doubt for a little while. The interim, though, becomes a little bit dicey as it tries to sort of digest those fast gains.
All right, well, here's some more to digest. Meg Terrell sat down to speak with Dr. Anthony Fauci today on renewed COVID-19 cases and a backtrack in some states with phased reopenings. And she joins us now ahead of that discussion. Meg.
Well, hey, Morgan, that discussion is going to be airing at the Milken Institute Summer Series at 1 o'clock today. And, of course, the Coronavirus Task Force is holding its first briefing since late April at 12:30 today. So reflecting some of the concern that is around this surge in new cases. Yesterday, reaching another new high, more than 39,000 new daily cases reported in the U.S. The test positive rate in the U.S. has also been steadily climbing, although yesterday we did get more tests and that rate fell to 6% from 7.1% the day before. But this, as Quest Diagnostics is reporting that its capacity for testing is under strain, citing an increase in 50% in orders for diagnostic testing over the last 3 weeks. And we are hearing some headlines, the Washington Post reporting from an interview with Dr. Fauci last night that he's considering something called pooled testing, which would be testing larger groups of people at the same time in order to see if they find positive tests that could dramatically increase the amount of testing this country can do. Meanwhile, the hotspots that we've been seeing around the country continue to be the same in terms of the states like Arizona, California, Florida, and Texas. Texas reporting its third straight day of record cases yesterday, more than 6,000. And hospitalizations, as you can see, are also increasing. The darker yellow states are the ones that are seeing the biggest increase in the last week. Texas, of course, yesterday pausing its reopening amid this surge and halting elective surgeries in hospitals to make space for potential COVID patients. And this, guys, is the CDC director in one of their rare briefings yesterday, saying there are maybe 110 to 120 counties that the CDC CDC considers hotspots in terms of significant transmission. So looking at just the states doesn't tell the story. But if you dig down to the county level, it's counties in those states, Arkansas, Missouri, Louisiana, Texas, Arizona, California, that are seeing these problems. He also said that 10 times more people have antibodies for every case that we've identified in the U.S., and that 5 to 8% of the population, the CDC estimates, based on their serology surveillance, probably have been infected with the virus. Now, guys, that means that 10 times more people are infected that we know about, which public health officials say makes it very difficult to get our arms around containing this virus. Back over to you.
Yeah, that's one of the challenges they've had in Harris County for sure. In Texas, just not enough contact tracers, and a lot of those cases just running around without controls. Meg, we'll talk more about it this morning. Thanks for that, our Meg Terrell. When we come back, we'll get a handle on the bank stress test from yesterday and what it's doing to shares of names like Goldman Sachs and JP Morgan, some of the implications for extreme scenarios when it comes to loan loss ratios later on in the year, and the resubmission of capital plans. There's a look at what they're doing pre-market. We're back in a minute.
Can I find an investment firm with a truly long-term view that's been through multiple market cycles for over 85 years? With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
Things are changing fast. Our business needs people with the right skills.
But who can help us find them?
That's what Kelly does. We'll help connect your business with the talent you need. Visit that'swhatkellydoes.com.
Is not only had a wake-up call, but they're now challenging themselves to say, well, what's our role in this? What more could we do to open up opportunities for those who have been left behind?
For tech companies, the critical thing is to acknowledge where we are with women, with people of color. It starts with pay equity and promotions.
The word to think about is targets, not quotas. Target is something that is aspirational and that you are working towards, and it's something that you can exceed in that moment.
I'm Doug Hirsch. You may already know that GoodRx can help you save up to 80% on your prescriptions. Unfortunately, many Americans can't get to a doctor right now. The good news is that for many health issues, you can see a doctor online. It's easy. Just go to GoodRx.com, and with a few clicks, you'll be treated by a licensed medical professional, all from the comfort of your own home. Visits are confidential and affordable. Need a prescription? Your doctor can send it to your pharmacy or have it mailed to you. Get the healthcare you deserve at GoodRx.com.
Just always thought dog food is dog food. Didn't really piece together that dogs eat food. As soon as we brought the farmer's dog in, her skin was better, she was more active, high quality poops. If I can invest in her health and be proactive, I think it's worth it.
Looking to refinance your mortgage? The first thing you want to do, find out how much your home is worth.
Just go to ownerly.com, enter the address, and see the home value instantly. Come to ownerly.com and see what your home is worth for free.
Welcome back to Squawk on the Street. Bank stocks weighing down the market this morning after Thursday's stress test. And Wilfred Frost breaks down what we learned late yesterday. Hey, Wilf.
Hey, Morgan. So the standout point is that the banks are going to be retested in the fall. Markets, therefore, don't have that 12-month forward-looking certainty on capital levels and capital return plans that they normally get. Dividends, though, the thing that's grabbed the headlines. So the rule here, banks cannot pay out more than a trailing 4 quarters of earnings. Put another way, they can't have an over 100% payout ratio. Here's where we stand based on current dividends and trailing 12-month earnings. Most banks look fine, for now, that is. A few, like Wells Fargo, don't. They are widely expected to have to cut their dividend. By the way, Capital One Financial also above 100% on this measure. Citizens and Huntington above 75%. But all banks will have issues soon if they have multiple quarters of low or no earnings like most did in Q1, as those quarters will then replace good quarters from last year in that trailing 12-month earnings calculation. Now, on the capital side, it looks like Goldman Sachs' actual stressed capital buffer, or SCB, sits below their required one. So they have some work to do by October the 1st to rectify that, but it should be very achievable work to do. Morgan Stanley, by the way, seems to have the most positively surprising SCB result, their required level falling significantly. That's likely because of the E-Trade acquisition. The bottom line, though, we're fine for now. 2% share price declines, not too bad for 2020. But another big round of tests to come in the fall, and the Fed looks like it's prepared to be tough on the banks then if the economy doesn't improve between now and then.
Wilf, maybe we'll learn some more when Powell and Mnuchin go to the House next week. Appreciate that, Wilf. We'll see you in a little while, Wilfred Frost. Take a quick break here on a Friday morning as futures continue to be a tad weak. Plenty to get to, including this new street high on Amazon and an upgrade of eBay. We mentioned the downgrade of Boeing again, and a new street high for Snap in a moment.
Do you know what your customers are thinking right now? Every moment, customers are telling you how they feel, what they like, and all kinds of feedback you can use to grow your business. Medallia captures it all and makes sense of it, showing you where to improve and how to create great experiences. In the moment, not after. Medallia, the customer experience platform that keeps you connected.
So I'm going to hold on promoting you this quarter. Cool?
Drop the taco. Get in the car. Does this Sentra feel like a compromise to you? Wait, what? The handling. It's good, right? No compromise there. Nope. Watch this. Breathe. Rear automatic braking. So if this Nissan Sentra isn't going to compromise, why should you? You're right. Atta girl.
The all-new Nissan Sentra with more standard safety features than any other car in its class.
Buying a car from Vroom is so easy. All you need is a phone and a finger. Just scroll through amazing hand-picked low-mileage cars, then tap to buy. That's it. No sales speak, no wasted time. Just straight-up great cars. Right from your phone to your driveway. Go to Vroom.com and pick your favorites. With Vroom, you can buy a car from home and have it delivered contact-free. Plus, you have 7 days to return it. Vroom. Get in.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Nike's going to be a story today. Obviously, big surprise miss as the wholesale model gets hurt by some of these store closures. Big implications here for apparel especially. We'll talk about that. Shares down 3% when Squawk on the Street comes back.
Venturing beyond the neighborhood, reshaping local economies, bringing the workforce back safely. The high stakes for a vaccine. Stay connected, stay informed. Watch and listen live on the CNBC app.
Jim and Joanne are here to pick up the same prescription. They both know the system is not on their side. They both know drug costs are out of control. But one of them is taking back control with GoodRx.
Next.
So while he's paying that much, even with his insurance, she's paying this much just by using GoodRx. Use GoodRx to compare prices at pharmacies in your area and stop paying too much for your prescriptions. Download the free app today and take back control.
My reputation was trashed online. I felt completely helpless. My entire career and business were in jeopardy. I called Reputation Defender.
Take control of your online reputation. Get your free reputation report card at reputationdefender.com. Find out your online reputation today and let the experts help you repair it.
They were able to restore my good name.
Visit reputationdefender.com or call 1-877-866-8555.
While the future of work remains a question mark, one thing is certain. Reopening will be a journey. That's why Salesforce created Work.com to help at every step of the process with tools like manual contact tracing to help prevent one from becoming three and three from becoming more.